Okay, good morning. Comment allez-vous? How are you? It's 6:30 a.m. on Wall Street. Time to get our global macro on. We got trading starting in about 3 hours. So we got to align our satellites. If you're a member of QuantBox, you've already gotten your update. Yeah, check this out. Sell this, sell this, sell this, buy that. So that came out 33 minutes ago. So that's a good way to start the pre-New York session. But pre-London session, you got another update from QuantBox. So what it's doing is going through and looking at everything on QuantBox and giving you an update on what has changed and right before the new market opens. So that's a really cool new service. It's less than $1 a day to add that on. Anyways, let's get our global macro on and uncover the best fundamental opportunities across global markets by looking at sentiment, inflation, employment, GDP, technical trends, open trade positioning, seasonality, and sentiment. I really should add that long and short term sentiment. Cool. I love this so much. I geek out on macro so much. I went to Harvard for 5 years to study this full time. Graduated cum laude. Cool. Really shows you my love and passion and dedication towards that. Anyway, so we build all these tools so that we can get a clear picture of what's happening. And so we have a dashboard that looks like this, so we can get an update here. We look at things we're interested in buying. We look at things over here that we're interested in selling. We can look at the shape of all the stock markets around the world, so on and so forth. Quick, dirty, and easy. Yeah, but then we can analyze. What's the technical trend? What's all the macroeconomic data? What about seasonality? What's on the calendar today? Retail positioning versus institutional positioning. All of this can be seen quick and easy with QuantBox. Once a week, we update our commitment to traders report. Ooh la la! By how do you say it, like organizing this into the stock of capital and the flow of capital week over week by institutional investors. What about central banks, you say? Yeah, we got all that too. We have all their projections for the future. What? Wait, what? Yeah, their projections for the future. So we pull this data out of all these different central banks around the world so that you can see their projections. Now, why would that be important? Well, if you're trying to figure out Fed policy and you see in CPI, you get a certain number, let's say 3%, and the central bank thought by now we would be at 2%, you can see that there's a disconnect and that a policy change might need to take place by the central bank so that they actually meet their goals, because they're currently not meeting their goals. So you can compare what is versus what they thought should be and then make intelligent, informed decisions. And this is a really powerful tool that lets you identify the intrinsic underlying trend or lack of intrinsic underlying trend. And we went like 5 weeks without any trend. Why is that important? Well, if you know there's no intrinsic underlying trend, you keep your powder dry, you keep your trades small, and you wait. Well, everyone else just throws down big trades and they're scratching their head. How come they're not getting the results they expected? They bought something and it went up a little bit, but not much. And then it fell. So then they sold, but then it fell a little bit and then it didn't fall any further. They're like, what's going on? What's going on? What's going on? Well, it's because the trading conditions lacked a trend. Now, it's not a trend you can easily see, but you have the tools to do what others wish they could. Anyways, if you're watching this on YouTube, swing by QuantBox, take a trial, man. It's $8. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. And again, the alert service is here if you want to add these emails. Now, it's more than just those market setup emails. That's just one component. The other thing it does is it looks for situations that you need to be alerted to that could be a fundamental trade setup. That could be. So they say, hey, Jean-Guy, check this out, and sends a message to your cell phone. Go check out these things. There might be an opportunity fundamentally. Okay, fundamentally. Then you go do your technical analysis. See if you like it. So let's load it. Loading, loading, loading. Loading, loading, loading. Okay. All right. A bit of improvement here, ever so slightly. Nothing to make a big deal about. Oil still coming down, approaching, we're below 82 now. That's pretty significant. Big move yesterday. Yeah. Gold hanging steady, hanging firm. S&P 500 back to 5,000. That was our target, wasn't it? When this was like 54, we were saying 5,000. Well, here we are. What do you think? Should we plant our flag here and say that's as low as we're going to go? The tone needs to change in the market, right? The tone needs to change. The sentiment needs to change. So we'll keep an eye on that. Okay. Euro dollar flat right now. And Bitty's still coming down. Okay. The markets haven't opened. So we're kind of flat here. We'll get into the scatter plot, but you should just see the biggest outliers here. Bitcoin's being sold hard. Makes sense. Okay. See market change there, negative 2.1. Hey, negative 2.1. Nice. Okay. Small business in the United States getting sold hard. And oil. Those are the big down outliers. And then up for copper. And I think it was on Monday, I did a whole presentation on copper. Maybe you want to watch that. It's nice that we added these assets, right? Okay. So then you put your eyeballs over here. Okay. And the first thing you see on the left side is dollar rand up. Okay. Euro Kiwi up. USD CAD up. USD yen up. Euro Aussie up. What did we learn? Well, we're bulls on dollar, we're bulls on euro, and we're bears on Kiwi, CAD, and Aussie. Commodities, commodity currencies. So we want to buy euro, dollar, okay? Euro and dollar, dollar and euro, and dollar. Okay, so we're definitely buying dollar and euro. And then over here, these are all the things you should be interested in selling fundamentally, by the way, fundamentally. Kiwi dollar. Yeah, well, we're selling Kiwi over here. Well, we're selling Kiwi over here. Pound dollar, we're selling that. So we're buying dollar again. Aussie dollar. Well, we're buying dollar and selling Aussie, just the same as over here. And Kiwi Swissy. Okay. And then even euro dollar, but we're buying euro here. You don't want to sell euro there. So the opportunities you probably want to pull up on your chart. And by the way, if you use this right, you see this in 15 seconds. Go to your charts and check out. We don't know. QuantBox isn't doing technical analysis. It's just saying fundamentally it would make sense if euro Aussie is going up. Do your technical analysis to buy dips at support. Same for USD yen, same for USD CAD, same for Euro Kiwi. You go to your charts, you open your Euro Kiwi chart, you look at multiple time frames, where are the moving averages, where are the pivot points, what's the price action? And it's like favor upward opportunities over downward opportunities, and vice versa. If you see Kiwi dollar short opportunities, take them. And if they work, let them run. Okay. If you have all these different things pointing down, why would you have the gall to only make 22 pips on a trade when it's probably worth 222 pips? Well, you didn't know it was worth 222. Well, that's what QuantBox is telling you is probable or maybe. Okay. But based on logic, not guessing. Let's take a look at the underlying intrinsic trend. Okay. The weekly cooled off a little bit. Okay, remember this was very, very, very bearish. So we look at this now. We have negative scores of -4. That's still quite good. Let's see if we can reload that. There we go. So it's still quite bearish. Favoring dollar. Well, we just went over that. Selling Aussie. That's what we just said. Buying euro. Ooh, but that's normal. But we just analyzed the market and seems like euro might be strong. So be careful. CAD. Yeah, sell that. Kiwi. Yeah, sell that. Gold. Well, our market's down because inflation is high. So you might normally buy sell gold in this situation, but in this situation, I would probably be a buyer of gold. S&P 500, sell that. Yeah, so I go through this and I'm like, okay, sell the S&P 500, check. Sell Kiwi, check. Sell CAD, check. Sell Aussie, check. To buy what? Dollar, yep, check. Buy Swissy, yep, check. Yen, well, we have a monetary policy issue with that. So, not necessarily, maybe. And now I just organized my thoughts. Now I would go to the charts. Okay. You don't need to look at every single page here to determine that you want to buy dollar today. What QuantBox is confirming is it's still bullish, the US dollar, fundamentally. Then, if you want to do deeper dives into longer term views of like what's the Fed going to do over the next 6 months and how does this compare to the Bank of England or the ECB, Quantbox is really good for you to do that type of research. And how long could the trend possibly run? If you're like, if I am long USD CAD, how long could that possibly last? Well, then you're like, well, let's just pull that up. Okay. It's not an entry type situation. It's how far can you let this run? And if you bought a dip today, well, the support is right around 137 and a half to 136 and a half. Okay. So if you bought that, okay, maybe this goes to 139 in the next week, 138 to 139. So if you buy a dip, okay, so all that's helpful, but you don't need this to make a decision. Okay, you want to make your decision a little faster. And so you could do something really as simple as you open this up. All right, I'm going to open my charts and look for bullish opportunities. I'm going to open my charts, look for bearish opportunities. Done. So look at the risk gauges. If I'm buying dollar, probably a risk off scenario. Okay, so you go weekly risk off, monthly risk off. Yep, 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 yep. Golden. Okay, so where I'm risk off buying dollar today. What are the trades doing? So if I'm doing dollars, you want to look at majors. And this one's neutral, but we're not interested in trading that one. Okay. We're probably not interested in trading that one. Why? We want to buy both of these. Remember that? But it does show you Swissy's even stronger than dollar. So maybe I'm interested in those Swissy trades today. USD CAD is down, not up. Okay. Well, maybe that's an opportunity. How do I know? You open up a chart. Is it a higher low? Then it might be a buying opportunity. Is it a lower low? Take a walk. You're not interested. Okay. USD, whatever is up here is, I can't even see it. You must be a yen is doing very well today. Let's take a look at the calendar. Last night I traded the Aussie jobs report on my own, but all right. It wasn't that big of a deal on the short run when you watched it. I don't know. It dropped like I didn't even count the pips. Let's just say it dropped 25 pips and then came back 25 pips. So jobless claims this week, yeah, but usually benign. These things come out very trendy, which is nice. They're very stable, in my opinion. But if inflation isn't out of control again. Let's just put a bar across that. Inflation is stable. Yeah, we know over the last few months it's up a bit, but it's we don't know if it's a blip or a return of the beast, right? We don't know. Let's just say it's all part of the choppiness of having fixed inflation related to the supply chain of COVID. So that now it's just going to be choppy. And we have an expanding economy, so why not a little bit of inflation, right? But anyways, let's focus that and say in the dual mandate, the Fed has already gotten inflation down from 10 to 3. So, okay. um, what's the other mandate? Employment. And if employment comes down, that may be disinflationary as well. And so now we could shift our focus back to all our different employment reports. So you have weekly jobless claims, great. You have non-farm payrolls, great. But you have the ISM services subcomponent of employment, right? You have JOLTS, for example. And so we can start looking at these types of things again and saying, okay, well, how does that fit in the Fed's thinking? Okay. So, anyways, maybe we care about this again a little bit more, but I wouldn't make a big thing. Okay. Next week's a big week. I pointed out this before, but there's some pretty interesting things going on next week. Okay. US GDP, for example, home sales, for example, interest rate decision out of Japan, PCE. Okay. Big deal. So get ready for next week, late next week, right? The rest should be easy peasy. Okay. I keep looking at this and it says French fries. French fries. What French fries? No, French flash manufacturing. Like French fries. Oh yeah. All right. So let's take a look at the heat map. Okay. Yields. Okay. This week just been on fire. Okay. Rand is getting crushed. Why? Emerging markets have a lot of debt denominated in dollar. And well, when the market thought the Fed was going to cut 6 times, it made the dollar cheap, and that's really good for emerging markets that have debt priced in dollars. Cheaper dollars means a cheaper loan. Well, then we went from 6 to 5, and then from 5 to 4. Meanwhile, the Fed's been saying three, three, three since last year. Three, three, three. Then the market went skip 3 and went to 2. So we went to 6 to 5, 5 to 4, skip 3, go to 2, and now like 1.5. And so, anyways, as the market shifts that way, the dollar gets strong, and well, that's bad for emerging markets. So I imagine I'm not looking at Turkish lira, but it's probably bad for the Turks. Copper doing well. That's what you buy during positive GDP scenarios or high inflation scenarios. Silver, okay. Gold. So what do you buy in high inflation scenarios? These metals for sheer, man, for sheer. Okay. So we have a slowing economy, or let's say a risk off scenario with inflation. So risk off, buy dollar. High inflation, buy metals. Kind of interesting. What's the opposite? If you're buying metals, where do you get your money? Where does the money come from? Okay. Well, you sell Bitcoin, you sell the stock market, 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 and you sell the stock market. Oh, and you sell the stock market. Okay. You get out of financials and you get into physicals. Okay. Real estate. Let's say you have a rich uncle that lends you money for super cheap. He's like, just pay me back 3% a year. Meanwhile, everyone else that has to go to a bank to buy real estate, to get a mortgage, they have to pay 7.5 or 8. You pay 3. So you can afford more. You can afford more. If it comes down to the monthly payment is 10 grand, someone will that has a higher interest rate payment or interest rate level can they get a smaller mortgage that costs them $10,000 a month. You get a bigger mortgage that only costs you $10,000 a month. So you can buy anything you want. So because you can pay a higher price. So you get the real estate deal you want because everyone else has to pay a high mortgage, right? The high interest rate on their mortgage, and which keeps most buyers out of the market anyways. Then what? 1 year, 2 years, 3 years from now, the Fed is cutting interest rates, mortgage rates are falling, and more buyers are showing up. Probably double or triple the amount of buyers in the market in 3 years than today, simply because interest rates have come down. What's happened to the value of your property? If there's 3 times more buyers than when you bought it, yeah, it's gone up. So you dump it, you sell it. Prices have gone up 20, 30% in a year for 2 years. Man, you should have been in California in the 90s. It was staggering. Like you can't believe it, but it'd be stuff like the value of an apartment building would double in a year. Huh. San Francisco. Yeah. All right. Again, kind of organizing thoughts. There's two ways to look at this, and I talked about it yesterday in our day trading group. There's two methods to using this page. By the way, this is the most powerful thing in QuantBox. It seems pretty easy, but then there's some comparative analysis going on here. But let's just say it's the foundation, and it goes. This kind of data is used in calculations all over the place, right? There's two ways to use this data: brute force, which means you don't think about any of it. You just say, these are the things I'm bullish on. I'm not interested in anything neutral. And let's see if I can get this scroll down a little more. Sorry, there you go. And these are the things I'm interested in selling. Everything neutral, I'm not interested in. By the way, it doesn't mean you sell it. It means your bias is bearish. Okay. Everything at the top, it doesn't mean you buy it. It just means your bias is bullish. Now, what does that mean? You go to your chart, and if Euro Aussie's falling, you're not interested. You can watch it hour after hour, day after day. You don't, right? Frankly, my dear, I don't give a damn. But you continue your technical analysis, and 4 days from now, it starts to make a series of higher highs and higher lows. Well, you're a bull. Take your trades. This is just about aligning your trades with your bias. And you're like, well, I'm bullish here. Why? Well, because of COT, right? The commitment of traders report, retail sentiment, seasonality, technical trends or statistical trends, um, productivity, inflation, jobs, interest rate differentials amongst these two economies. I mean, dude, it's pretty serious. So you're like, all you do with this is buy a dip in an uptrend. If it's trending down, don't do anything. But as soon as it makes a higher high, higher low, now you're interested. Game on. Okay. I call that brute force because you're not actually thinking forward. You're just because this is all backward looking, right? GDP last quarter, inflation last month. Okay. Now, the more finesse is saying, okay, well, things are changing and inflation is changing, jobs are changing, the market is changing. And the central bank in, let's say, Europe, we'll pick on the ECB. You analyze using QuantBox all these different things, and you say, well, the future is going to be different than the current. And based on your analysis, if you're reading the QuantBox data, but you're watching news outlets on TV, you're watching Fox Business, you're watching CNBC, you're watching Bloomberg, maybe you're reading the Wall Street Journal or the Financial Times, and all of this stuff makes you feel like the ECB is going to cut interest rates soon. QuantBox would help you do that research. So you would go to the central bank tool and then say, well, where's inflation right now relative to what the ECB thought inflation would be right now? And if inflation now is actually lower, shoot, you don't have to have higher interest rates. And then you're like, okay, now I can confirm it. QuantBox helps you do all that. So then you can say, well, I think euro might weaken and euro Aussie will fall into neutral with euro pound, euro CAD, euro yen, euro Swissy because of the cutting of interest rates soon. So now you got some finesse and you're thinking forward. Not you don't have to do it that way. Okay? One day you will be able to do that. In the beginning, especially if you're new to macroeconomics, right? I'm pretty sure you haven't taken 27 classes in economics. Right? uh, so you have to start somewhere, right? So you start with the basics. I think I did like 40 something classes at Harvard. Just crazy. Um, so how do you start with it? And that's what I meant by brute force. This is very bullish, and that's that. Why? You're trusting these numbers. And you'll be bullish on Euro Aussie until something changes in the market. QuantBox will see the change in the market. This will go from bullish to neutral. And if you subscribe to the dollar a day service, you'll get a message on your cell phone to say Euro Aussie went neutral. And you're like, okay. And you take that off your radar. Your list. What do you call it? Your watch list. You take it off your watch list, huh? Meanwhile, something else will probably happen where maybe euro yen, euro Swissy goes bearish. Maybe euro dollar goes bearish. So now you focus on those assets. And it's just brute force. You don't need finesse. You're like, no, I'm going to use my special gray matter between my ears to, outsmart the market. I don't think you should ever try to outsmart the market. I think you need to use these tools to figure out what the market's doing and then do that. Let them carry you across, right? Let them carry you across the finish line. So anyway, so that's how I suggest you use this. And your decision is today you will sell Kiwi dollar or not. Today you will sell pound dollar or not. Today you will sell Aussie dollar or not. Sell FTSE. Sell yen. Well, yen pairs. Sell Kiwi Swissy. Sell euro dollar. Okay. Or not. And when all your trading has a fundamental bias behind it based on logic and intelligent quantitative research. Imagine every single trade you made was backed by mathematics. It's going to help you prevent a lot of dumb trades. You see that? In my humble opinion, as a trader that's been doing this a long time, in particular, self-taught trader. So I come from the school of hard knocks. And the first step to success is stop the bleeding. So if all QuantBox did was keep you out of stupid trades, then it's a huge win. You'll end up making less trades and more profits, most likely, what I've seen in the past. Cool. So you're like, all right, so let's look at one of these. Aussie dollar. Okay. Okay. Aussie dollar seems to level out closer to summer. GDP in Australia, 0.2. Now, the point two could be a rounding error, right? Like, compared to the United States of 3.4. Wow. Well, that probably favors the United States, huh? What do you think? Hmm. Okay. Inflation 4.1 versus 3.5. Well, that probably favors the United States too. Okay. So that's a -2, which means you're a bear. Favors the United States, favors the right side. Employment, the same, neutral. Okay. Interest rates, much higher. Okay. Which is better for Australia. So on and so forth. Now you look at sentiment, you start with institutional. It's 50-50 for the dollar right now. Huh. Hmm. So if we get a dollar, remember how we looked at it and it looked like everything with favored the dollar when you look at the scorecard? If a trend, well, let's assume a trend has appeared. This is telling us it's just begun, or it's phantom. It's a phantom trend, which means everyone's freaking out. The Fed's not going to cut. The Fed's not going to cut. And then next week, GDP is down and PCE is down. And all of a sudden, the Fed's going to cut. The Fed's going to cut. And we're all the way back the other way. Sell, selling the dollar, right? Like, there's a pretty high chance of that, right? Now, you'd have to look at it and like, really, is PCE going to be down? Well, PCE is going to be a lot lower than CPI. I mean, a lot lower, like 1% lower, or percentage point, right? 100 basis points lower. GDP, is it going to be slower? Maybe, but maybe the next quarter will be slower because we're starting to see layoffs and all that kind of stuff. And so maybe something is happening, right? But right now we see dollar strength. There's no doubt about it. But maybe that changes because right now the market, the institutional market's 50-50 on the dollar. Okay. But institutions are 80% short Aussie. Well, that's good enough for me, right? And yet retail's long Aussie. Retail is long Aussie dollar. What? Look at this. They're what? They're long? Why would you be long this? I don't know. But cool. Now imagine you are a seller and it does get down to support. The nice thing is you could always get out. There's going to be plenty of suckers to buy your position up from you. And that's good. Then it'll go up for a couple of weeks and then you sell it again. Okay. so on and so forth. Isn't that lovely? Oh, where are my charts? Where are my charts? They're over there. Oh, it's on the wrong monitor. Okay, boom. So stock market fell, kicked off the 21. Uh-huh. So anyways, now it's down short at 52. Now we're at 5, so 200 points on the S&P 500. That shows the risk off scenario, but the safe zone, if you will, is in here technically. There's a weekly target, which is an opportunity for profit taking, and a monthly aggressive target, which is an opportunity for profit taking, which then would probably lead to a new short next week. Simon caught the HK right on. Yeah, on the Aussie news. Yeah, smart. Well played. So what I wanted to get to though, I missed that. Snap. Oh, look how close I got. You're kidding me. You son of a. Oh, look at that. That's so funny, isn't it? I missed that on a 5 minute. I just want to look at it. I want to look at it because it's so disastrous. Uh huh. Ah, shoot. All right. Anyways, missed one. Swing, batter, 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 swing, batter, batter, swing. I feel like Aaron Judge on that one. It could have been a home run if I only hit the ball. Yeah. So there you go. All right. Well, I wanted to look at let's pick on USD Kitty CAD. And I wish I had my laptop because we had a trade plan based on this yesterday. But anyways, this was great. Wasn't this a great exercise? We took this trade. It came down, went up. We hit our target, made our money, and now the market's collapsed. Oh, we. Right? That's squeezing the last of the lemon juice out of the lemon, huh? Right? Now this is a lemon. All right. So, now what? We had a trade plan. When did we meet last night? But our meeting was 2 hours, right? From 4 to 6, 6:30, 2.5 hour meeting yesterday. That's pretty long for a Wednesday day trading session. We usually knock those out in 45, right? So, anyways, but we had so we must have been 1, 2, 3, 4, 5, 6, 7, 8, 9. I mean, we must have been here, right? All right, so let's analyze this area in here and let's go into a smaller time frame. And what we had said is, what we had discussed is how to use QuantBox and then how to use technical analysis to enter the trade. And so we looked at QuantBox, and just like today, QuantBox said macroeconomics favors USD CAD long. The question is, so now what do? You wait. And you wait for a reversal up pattern at support. So he's like, is this area here, this pivot, is this support? Maybe. Will it be a psych level? Will it be something else? Well, we don't know. Okay. But you wait for your sign. That's what technical analysis is. So we expected an up into this zone. And then if you were a bull, you don't buy that. That's a lower low. So then we would expect it to come back down. That's potentially a double bottom. Could I buy a double bottom? You could. It's aggressive. Okay. Remember, picking bottoms is a strategy that always stinks. You have to think about that one. But once you get a higher high on logical support with a double bottom, then you can be in business to buy the next higher low. And now you have a technical trade plan, a reversal pattern at support to the upside, backed up and confirmed by your fundamental bias of macroeconomic data. Did it occur? No. And I said, and we actually talked about this last night, I said the worst case scenario is it doesn't work, that the market wants to fall further. And you spend hours waiting for the technical setup that doesn't arrive. Well, we all know the secret sauce to trading is patience and discipline, which then leads to consistency. So you have to be patient and disciplined. So you're wrong. You didn't get a trade. You didn't lose any money. Imagine the vast majority of the time when you're wrong, you don't lose money. Right now, newer traders, the vast majority of the time when they're wrong, they lose money. Well, we need to stop that bleeding. We need to bring that consistency. You're trading a fundamental trend or you're not trading. And you're trading with good technical analysis or you're not trading. Okay? Other little things. Here's a little plug for Investor Bootcamp. You really need to know how to trade. In particular, what I see here is you really need to learn how to trade pivot points. You really, 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 really do. Okay? This is a buying pivot point if you're already a bull, but it's really non-directional. I don't really care about that pivot point. That's the central pivot. That's not one I actually care that much about. Now, gurus that learned by reading my book or somebody else's book or read somebody else's book who learned how to do pivots by reading someone else's book, who learned how to do pivots by taking someone's course, AKA they have no idea what they're talking about. Okay. They make a big deal of that. I'm self-taught. I'm practically the first person to really talk about pivot points over and over and over, starting 20 years ago. And I make a big deal about this pivot, and I make a big deal about that pivot. Why? Because that's what seemed to be important when I looked at thousands, tens of thousands of situations like this. So if you're a bear, you sell. If you're a bull, you buy. That's it. There's no other discussion. Well, how do I know to be a bull or a bear? QuantBox. It's a fundamental decision. There's nothing to do with your pivot point. Okay, great. But let's talk about this. If you bought here because you're a bull, this is the conservative target. This is the aggressive target. And then sort of the outlier target. Doesn't happen often, but it happens target. Okay, is not this pivot. It's not. I could delete it. I don't really care about that pivot. Although you see, we respected it, but then we continued. Did you know it's this one? This is the always take profit pivot. Like you're stupid lucky to hit that pivot as a bull. Dude, seriously. Take some profit, take some risk off the table. Like that is redonkulous. It doesn't happen often, but it happens. And when it happens, take your profit. So when you suddenly just see this stuff, it's awesome. It's real. But you got to know, did you know? Like, look at the precision here. You knew that a week in advance. Okay. And look how often we respected this price. Well, that's the pivot. Well, what about this price? Look at that's okay. So typically, if you buy here, this is the best you could really hope for and plan for. And then you put that in combination. That's your monthly with your weekly. So you have a something screaming at you on a monthly basis to take profit. You have something screaming at you on a weekly basis to take profit. Dude, did you take profit? No. Okay. This could be your re-entry. Okay. So you took profit here, breakout, pullback, get long again. Okay. Then you skip this one and you get to R3. Okay. Vacate your trade and check into the Ritz-Carlton for a little R&R. Yeah. But remove the hope. Bring the consistency. So anyways, we had a little scalp. We went up there and now the whole thing's collapsed. But once again, this is technically not bullish on this time frame on the 1 hour. Okay. Go check out the daily. Uh-oh. Now I got to really zoom in. Okay. And so now we're watching these areas. This could, depending on what happens today, end up being bullish. And the next one's going to be kicking off that 21, which could be sort of there in the future. So we don't know where it's going to turn bullish. All right. But you need to identify these prices and wait for your opportunities because you're fundamentally bullish. Looking at May currently, there's a price down there that you might be interested in looking for a bullish reversal pattern. There's a price here. And then I see it's a roll reversal. So look. Okay. This whole zone in the future could offer an opportunity for you to look for reversal patterns to the upside. You might have to wait a whole week. Patience, grasshopper, patience. So let's say it falls for a week and everyone's bearish on this. You look at QuantBox, it says, well, nothing fundamentally has changed. There's just massive profit taking on that monthly R3, which you're like, yeah, that totally makes sense. So whoever bought here and bought here and bought here and bought here and took profit here, what do you think they want to do in the future? They're using the same tools as you. And they're like, yeah, somewhere around here, we want to reacquire this asset. So as we approach 36, 37, we'll buy it back. And so this is all part of their trade plan. It's just consistent. They're like, we bought it low, right? Look at bottom, 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 M2. That's where you're supposed to buy. It's in the training course. If you're a bull, that's the best price you could hope for. Not only does it make sense, people were hoping for it. They were praying for it. Please come down to 147-ish, right? Please come down to that monthly M2. And then there's the best you could possibly hope for. And really what happened is they bought it here, and you should instantly have that as a target. Okay. So that's price falling is them taking profit. News came back out and you get your second chance. Now what? Probably come down to here. And then what? So if you were a bull, and why are you a bull? You studied the macroeconomic conditions of both the United States and Canada using QuantBox to make a determination that the market favors the US dollar over the Canadian dollar. So you could have bought here, could have exited here, but now you're waiting for this in the future. And that's your patience, your discipline, and your consistency. And you're backing everything up with good technical analysis. You're an unstoppable force. Cool beans, huh? We're done. Peace on earth. May the pips be with you. May our profits be above average. I'll see you over at Forex today. Remember, if you're watching this on YouTube, you're watching it hours and 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 hours late. Why don't you pay the $8 and give it a shot? Huh?